Hello everyone, welcome back to our channel. Today we're diving into a crucial topic for anyone interested in trading: how to avoid Forex scams and stay safe. The world of Forex trading can be incredibly profitable, but it's also filled with traps for the unwary. Scammers are out there ready to take advantage of beginners and even experienced traders. So let's break down the most common Forex scams and, more importantly, how you can avoid them. Before we dive into how to avoid them, let's quickly look at some of the most common Forex scams you might encounter. 1. Signal seller scams. These scammers sell fake, guaranteed trading signals that claim to offer big returns. Unfortunately, many of these signals are useless or, worse, misleading. 2. Robot trading scams. Forex robots are automated software that trades on your behalf. Some are legitimate, but many are scams that promise outrageous profits and deliver losses instead. 3. Broker scams. Some brokers are unregulated and set up with the sole purpose of taking your money. They can manipulate trading platforms, freeze accounts, and disappear overnight. 4. Ponzi schemes. These scams promise high returns with little to no risk by pooling investors' money. The reality? They use new investors' money to pay off older ones until the whole thing collapses. 5. Managed account scams. Someone offers to trade on your behalf and promises great returns. You hand over your money and they disappear or intentionally lose it. So how can you tell if you're dealing with a Forex scam? Here are some red flags to watch out for. 1. Unrealistic promises. Be wary of anyone guaranteeing profits or promising high returns with zero risk. There are no guarantees in trading. 2. Unregulated brokers. Always check if the broker is regulated by a recognized financial authority. If they aren't, stay away. 3. Pressure to act quickly. Scammers often push for quick decisions. If someone is rushing you to invest or sign up, that's a major red flag. 4. Lack of transparency. Legitimate brokers and service providers will be transparent about their fees, charges, and company details. If information is hard to come by, that's a warning sign. 5. Poor online presence. Scammers often have little to no online presence, or their websites look cheap and unprofessional. Check for reviews, forums, and community feedback before making any decisions. Now that you know the common scams and how to spot them, here's how you can stay safe. 1. Do your research. Always research the broker or service provider. Look for reviews, regulatory status, and feedback from the trading community. 2. Start small. Don't invest large sums of money at once. Start with a small amount to test the waters. 3. Use regulated brokers. Ensure the broker you choose is regulated by recognized financial authorities like the FCA, ASIC, or CFTC. This regulation provides a level of security and recourse if things go wrong. 4. Educate yourself. Invest in learning Forex trading fundamentals. The more you know, the less likely you'll fall for scams. 5. Avoid get-rich-quick schemes. If it sounds too good to be true, it probably is. Focus on building a sustainable, long-term trading strategy. 6. Stay updated. Scams evolve. Keep yourself updated with the latest in the world of Forex trading and any potential threats. And there you have it, your complete guide to avoiding Forex scams and staying safe. Remember, the key is to stay vigilant, do your research, and never fall for unrealistic promises. If you found this video helpful, give it a thumbs up and share it with others who could benefit from this information. Don't forget to subscribe to our channel for more tips and guides on smart trading and financial success. Hit the bell icon so you never miss an update. Thank you for watching, stay safe, and happy trading.